Hey everybody, I had some questions, so I wanted to throw together a video that explains debits and credits because they can be a little bit confusing, especially because we have imbued the term debit and credit with all sorts of weird values in the English language, mostly based on banking. We tend to think of our bank account as when it's debited, that means money comes out of our account, and when it's credited, that means money goes into our account, which can be confusing when we're trying to think of the terms debit and credit as it relates to an accounting sense. So I would ask you as we start to get rid of those meanings for those terms in your mind and just start with a blank slate and recognize that from an accounting standpoint, a debit simply means an entry where we will enter the values on the left-hand side of the journal entry, and a credit just means an entry where we will enter a value on the right-hand side. If you'll think of debit and credit simply as terms that mean left and right, it'll actually be a lot easier. And the reason it's confusing is that some types of accounts are increased by a debit, but other types of accounts are decreased by a debit. So if we start trying to always think of the terms debit and credit as meaning increase or decrease, it can be confusing. Instead, let's think of them as left or right. So what I have up on the screen here are all of the account types. We have assets, liabilities, and owners or stockholders' equity. And then we have revenues and expenses and dividends. And you'll see that assets are increased with a debit, an entry on the left side, and decreased with a credit, an entry on the right side. But liabilities and equity accounts are the opposite. They're increased with a credit and decreased with a debit. You can see owner's equity is the same way, increases with a credit, decreases with a debit. Then we'll also see that revenues increase with a credit and decrease with a debit. And expenses and dividends are the opposite, right? They increase with a debit and decrease with a credit. So what's confusing about this is there's really the reason that they're like this is because this is how the whole system works together. If I increase an asset, so let's say my cash goes up, I'm going to enter that on the debit side or the left side. If you think about where assets come from, really the only other way for me to get an asset is to decrease another asset. So if I, bought a car, my car asset would increase with a debit and my cash asset would decrease with a credit. And so we'd have a debit and credit in those two accounts of equal amounts. Or I could increase my assets by taking a loan. So then I would increase the asset cash with a debit and increase the liability loan payable with the credit. Or I could increase my asset by receiving money from the owners, in which case I would increase debit with an entry on the left, I'm sorry, increase cash with a debit or left side entry and increase my common stock if it's a corporation or my owner's contribution if it's a smaller, like a sole proprietor company on the credit side. So we always have to have both a debit and a credit entry in all transactions, and those have to equal each other. We have to have the same amount of debits as we have credits. So every transaction has a debit part and a credit part. And we just sort of have to memorize these rules in the beginning. Here's how I memorize them. Assets, which are things that I own, are increased with a debit and decreased with a credit. I already know by this point that assets equal liabilities plus owners or stockholders' equity. And so if I know anything about algebra, I would know that the things on one side of the equal sign are going to be different than the things on the other side. In other words, I could say the assets are on the opposite side of the equal sign as the liabilities and owner's equity, and therefore If assets increase with a debit and decrease with a credit, I'll expect liabilities and owner's equity to be the opposite. So if that works for your brain, then by memorizing the one thing that assets increase debit, decrease credit, I'll also know liabilities and equity because I know they're the opposite. So that helps me remember three for the price of one, so to speak. I also know then that revenues increase my owner's equity. So they're built the same way. So a revenue increases with a credit and decreases with a debit, and expenses and dividends decrease my owner's equity. So they're the opposite. And so again, for me, this works to say I know assets equal liabilities plus equity. So assets are this way, liabilities and equity are the opposite of that. And then revenues and expenses, um, as they relate to owner's equity, helps me remember that since a revenue increases owner's equity, it's going to be its debit and credit rules will be the same as owner's equity, and expenses and dividends will be the opposite. That may or may not work for your brain. One last concept is the normal balance. Sometimes this really confuses people. All normal balance means is the balance we would expect to see for that type of an account. And since we would expect to see positive balances in accounts, the normal balance, if you've noticed the pattern already, are always on the side of the account that increases it. So since an asset is increased with a debit, its normal balance is on the debit side. We would expect to have positive cash or positive value in our supplies or equipments. And so if you'll just remember the normal balance is the side of the account, debit or credit, where it's increased, that will help you kind of get a sense for normal balance. So the normal balance for assets is a debit, and the normal balance for liabilities and equity is a credit. The normal balance for revenue is a credit, and the normal balance for expense and dividends is a debit. Remember, each time we make a transaction, it will have both a debit and a credit, and the debits and credits will equal each other. I'm going to give some credit to this little debit and credit rule page to a friend of mine and colleague named Mark Anderson. He put this together years ago, and I'll put a link to this document down in the notes if anybody wants it. Some instructors will let you use a little bit of a cheat sheet, and this can help as you're getting used to it. But I always tell students by the time you take your first exam, you need to have these memorized. It's foundational, and learning the debit and credit rules will really help you throughout the rest of your journey through accounting. Have a great day. If you have questions, don't be afraid to put them down in the comments, and I'll do my best to answer them. And I have a great class as well, because I know you're right at the beginning if you're learning about debits and credits.